the macro surge could be creating a little bit of a headwind, and also Michael Saylor doing something kind of interesting. We're going to break it down for you guys today. I do want to, of course, thank our sponsor, and that is I Trust Capital. For you guys to get into your own crypto IRA, make sure and use our link down below. This is, of course, a place where you guys can begin your journey of developing an IRA with your crypto, and it works with almost any kind of digital asset out there. Bitcoin, Ethereum, pretty much anything on the list, you guys can do that, including gold and silver. So set up your own IRA, get going, and make sure and start, because I think a lot of people put it off. I get it. Everybody's busy, but don't do that. Get going on it right now. Use our link down below and get $100 funding reward when you get started. All right, let's jump over to a couple of tweets here to kind of lead off what's happening in the market right now. There's a lot of data coming out. You've got, of course, 7 major data releases this week. The CPI comes in on Tuesday. We're seeing an expected of a 3.8 year over year, down from 4.2. That'll be interesting. PPI comes in on Wednesday. Expectation month over month down from 1.1. Retail sales hit. Initial job loss claims will hit. Housing data will hit. Michigan consumer sentiment, which is an interesting one that you should keep your eyes on July 17th. And then the Fed hits also on July 17th. So the point is all this data is leaning into next week, and that will be the second FOMC meeting by the Fed, and everybody is wondering where that's going to be heading in terms of what the Fed might do. Delity also says that we could see a final drop around Bitcoin, pushing it back down to under 60K at a 565 rate here. It is possible. This, of course, is according to their model, and which is currently kind of in this accumulation phase. And I think a lot of people that I've talked to, they're buying Bitcoin. They're doing it in, a variety of dollar cost averaging strategies. But let me know what you guys are doing. Are you actually buying Bitcoin right now because we saw a little bit of a pump over the last several days, or are you holding for a potential pullback on the market? Stablecoin market also shrinks a little bit by 7.7 billion. Not that that's a lot, but for stablecoins to actually fall, that is an intriguing data point. So think about that. It could be signaling a little bit more weaker liquidity, and I think also could be signaling that maybe even some of the stalwarts of investing in digital assets are starting to exit for other asset classes. So let me know, are you guys holding stablecoins and continuing to try to pull those yields? Some more news over the weekend, of course. All eyes are on the Strait of Hormuz. Iran is holding the keys, and from that we are seeing a little bit of stock movement, with the S&P 500 down just a slight bit, Nasdaq down 3, Dow Jones down at 1, crude up 3, and then Brent and gold also coming in with a little bit of stress in terms of the overall market. And if you look at this, you've got it coming from a lot of different angles. You've got how the officials now announcing that their particular area in terms of how they control certain flow of energy is also going to get more pressure, which means that they are anticipating a $200 per barrel price. Now that is a big announcement if it can actually come true. That would be a huge issue for the US, but more importantly, that would be a huge issue for a lot of our allies, including what would happen in China. So I know Trump is going to be meeting with Xi later this month. That'll be interesting. I think this is going to be on the top of the question mark overall. So speaking of Trump, here's a phone call that pretty much got markets a little bit skittish. Take a look. But we had a deal. What nobody knows. We had a deal. It was a done deal, and then they broke it. They always break it. We've had 10 deals with these people, and so we're just going to hit them very hard, and we're going to keep the Strait, and we'll probably run it. We'll become the guardian of the Strait. Maybe we'll call it the guardian angel of the Strait, and we should be reimbursed for that. When we do that, we're going to be reimbursed because the other nations are very wealthy. They're on our side, and now we're going to guard it. We're going to get paid for guarding it. A lot of money, but we just want to be reimbursed for doing all of this, for putting our people in danger. But we're really not putting people, we're really saving people. All right, so when you look at the Strait of Hormuz traffic returning to normal by December, this has pretty much fallen to Where are we at right now? 59% chance. This is low. And I think if you look at August right there, it's a 16. This is kind of the big one right now. There's basically no near-term possibility that this is going to happen by the end of the year. Maybe if something goes on where they can get a deal. And I think the pressure is going to really mount from mostly European countries and also to the US for a certain extent, because you've got a situation now brewing where the US is starting to see a lot of pressure on its own oil reserves. Speaking of that, here is the data right here. Wall Street Journal puts out U.S. Strategic Petroleum Reserve right now, the SPR lowest since 1983. Most of you guys weren't even around in 1983, but that's how low it is. So this will be a factor, and it will start to hit the gas pump if in fact this has to continue sucking out of the reserve. How much of an impact that has short term is the question. Do we start to truly see an impact on energy costs in the next few months? Because remember, there's something very important happening in November, and that, of course, is the midterms. And if we see $5 a gallon gas on regular, that would be very troublesome, I think, for the Republicans. And right now, they're hinging on retaining the Senate. So this is a big deal. You can kind of see the current crude oil, WTI, West Texas crude. What is surprising to me is we have not seen more of a spike. Now, part of this is probably because of the oil reserves that we currently have in captivity, but the real question is what is the forward thinking here if we're trying to consider repopulating that reserve? So this is where it's going to get very, I think, problematic for the US if something does not happen soon. All right, so I want to jump to a clip real quick. This is where markets are not believing that this is going to go much longer. Take a look. Impacting markets, you're looking at oil up a bit, but actually not a shocking amount. What do you see driving all this? So it is having some spillover effect, but they're very contained. I think there's two reasons for this. One is the markets deeply believe that these skirmishes are going to just remain skirmishes. It's not going to evolve into outright conflict yet again. It's not going to evolve into a long-term closure of the strait. And then the second issue is there's so much else to focus on, and most of what else you have to focus on is positive. So you put these two things together, and the market says, okay, I am going to reflect this in Brand going to high 7s, but I'm not going to take it to high 80s or 90s, which is where it would be if you believe that this is going to be much bigger than what it is. Do you think that's the right call? I do. What's driving equity prices is this belief that when you look at the transformations ahead, the US will continuously outperform the rest of the world. And I think that is a correct assessment. Now, how much will they outperform in absolute sense as opposed to relative sense? That's harder to tell, but I have no doubt they're going to outperform in relative sense. All right, so a couple of points there that Mohammed was getting at to first point is that the US still has kind of its kingpin position in terms of performance, and I think that would hold true. However, when you look at energy being one of the core staples of the US economy, I think this is a much bigger issue. Now, whether I agree with him saying that maybe investors are not looking at it just yet as a threat, I think the point they have to look at down the road is what if? And I think a lot of investors are already kind of pushing in that direction because we haven't seen what we have seen in the past, which is a much more aggressive S&P 500 on a growth chart. So where we are right now kind of bulls into what's happening in the 10-year yield also increased 3 basis points up to 4.55. This is the highest since May. This may have another factor that plays into this. And I've got a clip here that I want to kind of go to because Mohammed gets into how this will have other impact, meaning the issue in Iran and especially the Strait. How this will have much more impact maybe in other areas. So take a look. If you look at the traditional sources of funding for tech in particular, which is the Middle East, they will not be as forthcoming as they've been in the past. That have got a lot of local demands for funds right now because of the war that's happening right now. Correct. Because massive reconstruction, and also, like everybody else, they realize that they need more resilience. So if you look, the sources of funding is a little bit less. The uses of funds is a lot more. And the only way you get this to equal without a recession or anything awful is higher yields. That should be reflected in the stock prices. No. I think people are now realizing two things. One is it's more expensive than we thought, and two, not everybody's going to win. So the venture capitalist mindset is starting to set in, and that's why you see a bit more caution in terms of investors. I think Kevin Wersch needs a move up to actually do some of the things that he wants to do. Like, well, it depends what you think he wants to do with rates. There's two issues the economic payoff in terms of productivity is going to be significant. What you don't know is how many of these companies are going to ultimately succeed. So if you ask me on average, is the market fairly priced? I say yes. Individual names, then I'll say to you who's going to win. All right. So he points to a couple of things, and I think he might be right there in the sense that if you look at the market in general, maybe there isn't pressure here for a rate hike, but there are going to be a certain subset of companies that win. Listen, this has already happened before. It's happened in the era of the internet. It's happened in the era of mobile. And there are winners and losers. And there's going to be winners and losers. And I think the market is trying to figure it out. The problem is that right now the market isn't quite sure. We've seen SpaceX pull back. Anthropic has slowed down. Obviously, OpenAI is dealing with its challenges. That, I think, has a lot of push on the hyperscalers, irregardless of the fact that they're building their own electric plants next door. Those kind of things that I think will maybe end up being a silver lining. I'll explain that a little bit later. But the point is that it is going to push the Fed to make a decision, and the decision may come pretty early. They're looking at maybe October right now if a Fed rate hike was in order. And if you look at this right here, just from July 10th, that was 3 days ago, guys, it went from 47% up to 66% holding in October. The October meeting is the one to keep a very close eye on if we continue to see macro pressures facing Kevin Walsh and the Fed. So I don't know if we're going to see a rate hike, but it's right now looking as though we may. The other thing that you have to consider, the UAE is planning to build a new port, a new container terminal. All of this is happening right now, which means they're going to start flying away from tech companies here in terms of investment. It's going to cost a lot of money to go in here and, of course, deal with what's happening in the Strait of Hormuz. Shipments then, of course, would be moved overland to Dubai. This is another factor that plays into this. Will there be some alternative routes? All this has been kind of in play. Even Saudi has already kind of gone this direction as well. But I just wonder how much is that going to cost, because the cost that happens in the UAE and within those Middle East countries is you're going to be dealing with a pullback, a major pullback on investment in most of the tech community in Silicon Valley. That in itself may be a problem going forward. And if you look at that, Sky Hanks was SKH is a good example. This, of course, was the chip maker that went public last week, straight up and straight back down, which was very surprising to see that much of a pullback on a chip maker that is in the ripe market right now of making chips for a lot of driven technology that is really kind of making the next generation cost a lot more. And that's including everything from Apple to everything that we're doing on almost every electronic out there. So this is another maybe indicator that we could see a little bit more pressure. SpaceX is another one. Of course, we saw that thing go to its all-time high, short all-time high, but again now wrapping right back down to its essentially its market entry, holding right now in that 130 to 135 range. So that in itself still puts a lot more pressure, I think, on the S&P, and especially with what we're seeing in the AI sector. So I think that's why people are a little bit more skeptical. Now, what that could mean is rotation of capital. So how does that happen? Well, you've got Robinhood even saying it here. We're in a very crypto time of our lives, and I think they see what's happening with Robinhood chain, but also the potential here of a true rotational period where we may see assets much like what we saw going into AI starting to move out of some of the hyperscaler market and into crypto. So maybe we're at the right time. We'll see. Strategy, though, may be setting this up, and they're doing it by selling almost $500 million in MicroStrategy shares. And this, of course, means one thing. One, why did they need the money when they go out taking these loans? Two, is there a plan here where Saylor is trying to set up a major Bitcoin purchase at the right time? Maybe that is what's underway here. I don't know. Let's jump over to ETFs for a moment. If you look at spot Bitcoin ETF records, the 197 in terms of weekly, 197 million in terms of weekly net inflows ended the 8-week outflow streak.
The question is, can we get 2 weeks in a row? Can we get maybe 3 weeks in a row? I don't know. Right now, Bitcoin starting to stall slightly. What are we trading at? Right around 62 as we're recording. So that'll be a close watch right now for Bitcoin ETFs. ETH is pumping, and you've got Trump here, of course, pumping it as well, and that is moving ETH up quite a bit. Evan and I talked about this last week. ETH was our play. It is a curious time too, because as we see a rotation, ETH definitely outperforming Bitcoin right now, but maybe outperforming some of the other stars for the blue chip side of it as well. Are you guys in ETH? Let me know down in the comments.
I always love to see if we are a Bitcoin audience, an ETH audience, a Solana audience. Are you a hype audience, a dupe audience? Let me know in the comments down below. Tom Lee is staying on track though, and that is BMR just updated the Ethereum holdings, and they are continuing to drive into that 5% target. They are at 4.8% right now, the total Ethereum supply. This means a lot because remember, he is going out and earning money on all of that ETH that is out there. So his position continues to be very strong if you compare it to what's happening with strategy, where they are having to really do a lot of strategy to try to get out of the current market that they are in right now with what MicroStrategy and of course Stretch as well as the Bitcoin price. Tom Lee has a clip here that I think is interesting because he goes into the idea of what would happen, what would break your thesis, what would have to happen for that to occur. Take a look. To me, Bitcoin will make a full recovery. You know, I believe you're going to see Bitcoin over 100,000 by the end of the year, and Ethereum, you know, back to over 5,000. So I think investors' patience is clearly tested because I think Bitcoin's been down 3 quarters in a row, but I think it's never been down 4 quarters in a row. So this would be a test that if they don't bounce from June to September, then you're right, maybe something's broken. Is there a price point at which you would say, yes, it is broken? I think Bitcoin is like 5% below production cost right now. If Bitcoin falls below 50% of production cost, it means just take down the network. 50% of production cost. That would be significant in terms of a downtrend. You currently look at the Bitcoin estimated production cost at about 45K right now. That's the price of producing a single Bitcoin. So if it fell down below that, you're talking somewhere in, let's say, around the 25 range for Bitcoin.
25K range for Bitcoin. I think that's a pretty outlandish statement. I shouldn't say outlandish. It's a stark statement coming from Tom Lee, but I don't think he's anticipating. He didn't seem to be. He's looking at 100K Bitcoin and a 5K Ethereum by the end of the year. Let me know what you guys think. Just comment down below if you like this video. Hit like and subscribe. Drop a comment down below and also join our free private member group. The link is in the description.